Now, our very last panel session, ladies and gentlemen, is a critical one for the conference. We've heard much about the importance of urban biodiversity, but often the conversation can lean heavily on the ecological imperative. Today, we're shifting that lens. Our session, Green Gains, Investing in Nature's Value, is precisely about articulating the powerful, undeniable business case for nature and urban biodiversity. For too long, nature and profit were seen as opposing forces. But in this era of climate change, resource scarcity, and increasing stakeholder demand for sustainability, that perception is rapidly shifting. We are here to demonstrate why investing in nature is not just a nice to have, but a strategic imperative, a value multiplier for fund managers, asset managers, financial institutions, and funds. It is about building long-term resilience, unlocking new opportunities, and ensuring future prosperity. To dissect this vital topic, we have an exceptional lineup of leaders who navigate the intersection of finance, investment, and sustainable development daily. It is my distinct privilege to introduce them as they begin to take the stage. Our first panelist is a leader with extensive experience in both strategic investments and corporate management. He currently serves as the Deputy President and Group Chief Executive of Permodalan Nasional Berhad, PNB, Malaysia's largest fund management company. His focus today is on long-term value creation through investment and property development. His experience offers invaluable insight into how large-scale industries can not only adapt to, but also champion the transition to a more sustainable future. Please give a warm welcome to Dato Rizal Rickman Ramli. Next is a titan of Malaysian business whose career has been defined by transforming organizations and building long-term value, from leading some of our largest companies, including Maybank and Telekom Malaysia, to his pivotal role as Group President and CEO of Permodalan Nasional Berhad PNB. He has constantly demonstrated that strong corporate performance and responsible governance are two sides of the same coin. Currently the board chairman of Cypark Resources Berhad, as well as chairman of Worldwide Fund for Nature, WWF Malaysia, and My SDG Foundation. He is a steadfast advocate for the integration of environmental, social, and governance (ESG) principles, believing that these are not just a regulatory requirement, but a fundamental driver of future resilience and growth. Please join me in welcoming Tan Sri Wahid Omar. Our third panelist is a visionary leader who has shaped the financial and investment landscape of Malaysia for decades. During his tenure as the CEO of the Employees Provident Fund, EPF, and later as Managing Director of Khazanah Nasional, he was responsible for managing the nation's most significant capital pools. His strategic decisions were not just about financial returns, but also about building a sustainable future for Malaysia's citizens and its economy. He is chairman of Axiata Group Berhad. His perspectives on using capital as a force for good are truly inspiring. Please welcome Tan Sri Shahril Ridzuan. To complete the panel lineup, we have Mak Jun Yen, Chief Executive Officer, CEO, and board member of Standard Chartered Bank Malaysia. He's the first Malaysian CEO of the country's first and oldest bank, with a presence that dates back to 1875. As CEO, Mak drives the bank's business strategy and performance, overseeing the country's operations, and is responsible for overall corporate governance. He also spearheads the bank's sustainability agenda in Malaysia by promoting ESG and SDG-related priorities across its businesses and operations. A seasoned banker with deep experience in investment and corporate banking, Mak has had a distinguished career, having spent more than 25 years with Standard Chartered and is a strong advocate for sustainable finance. Please welcome Mak Jun Yen. Now, to moderate the stellar lineup, we have invited Dato Ho Kay Tat, publisher and group CEO of the Edge Media Group. With over 30 years in journalism, including stints at the New Straits Times, Reuters KL Bureau during Malaysia's economic boom, and as Singapore Business Times KL correspondent, Dato Ho brings unparalleled expertise in corporate and economic reporting. All that said and done, Dato Ho Kay Tat, over to you. The stage is now yours.
Thank you. Thank you so much. gentlemen, I sat through today's session from the very start, and I believe I'm now 120% convinced about the need for biodiversity and why it's important for us humans to coexist with all living forms on this one earth that we have. But the day's session was all about all this sciences and things that we need to do. But this session, as the song goes, is all about the money. And ladies and gentlemen, we have got a wonderful team here of panelists. They are either money managers or a money lender, right at the end there, our banker. But let me start. I want to take a macro picture first by posing the first question to Tan Sri Wahid, because in his one of his last assignment was as chairman of Bursa Malaysia. Perhaps, Tan Sri, you could share with us your experiences during your time at Bursa, how Malaysian companies are actually embracing ESG, sustainability, biodiversity, and how serious are they? Of course, the Edge and the Bursa, we launched the ESG Awards just to promote that. But can you share some insights on your own experience about our Malaysian companies?
Oh, thank you, Kay Tat. Firstly, Assalamualaikum warahmatullahi wabarakatuh. Very good afternoon. Thank you, Dato Sri Hazmi and friends at Samdabi Property. It's good to be back here. For those who don't remember, I also used to chair Samdabi Property as well. So very strong affinity still. So the other one, which I just want to emphasize the point made by architect Dr. Tan. He spoke about seeing the jungle fowl in Singapore, that lone jungle fowl. So to Dr. Tan, we actually have plenty in my neighborhood. I live in Cyberjaya. Behind my garden is actually Lake Putrajaya, plenty of jungle fowls. And likewise, my friends who live in Bukit Damansara will know that there are many jungle fowls here. So we have more jungle fowls, and we live, I think we treat nature better than our neighbor down south. Now, thank you, Kay Tat. Back to your question. We've been embracing ESG for a long while. Within the context of the market, we first introduced the FTSE4Good Bursa Malaysia Index back in December 2014. We started with 24 companies. But over the years, and based on the last review in June 2025, we now have 160 component stocks. Now, one of the things which we've done was to make sure that we have a mechanism where all companies are rated for sustainability. And we first did it with the main board companies and then later the ACE companies and so on. So now all public listed companies in Malaysia are rated when it comes to ESG. And we have seen over the years the rating scores actually improving over time. So I think that's a clear reflection of them truly embracing ESG. The only challenge that we have is that over the past 10 years, since we launched the FTSE4Good Bursa Malaysia Index, we've always seen the index doing better than the KLCI, right? So it's true all the way up to December 2024. But I'm afraid this year, with Trump tariff and so on, it has thrown the market into haywire. So, meaning that KLCI is down 7%, not as bad as Thailand, but when it comes to the FTSE4Good Bursa Malaysia Index, it's down by 8.2%. So I think this is actually the first year where we've seen where the FTSE4Good Bursa Malaysia Index is actually doing worse than the broader market. But I would say that this is actually purely situational because of what's happening around the world. But I think overall, if you look at the longer-term trend with corporates embracing ESG, I think the performance tends to be better. Thank you.
Thank you. The next question I would like to pose to our two money managers, Tan Sri Shahril, from your time as EPF and Khazanah, as well as to Dato Rizal. as well as to Tan Sri Wahid, because you were at PNB as well. Is biodiversity a loss, a cost, or an investment? And the question of capital allocation at board level, there's a question of what happens when it comes to biodiversity and the issue of capital allocation. What do you all do? What do you all go through? What are the views that the board discusses?
Yeah, I think I'll take the question first. I mean, it's something which, when I was running APF, something we actually looked at, and we actually started to initiate. I think Tan Sri Wahid will remember this, and Dr. Rick as well, right? The code of governance around institutional shareholders and how we act, right, with respect to basically being stewards, right, of these companies. And we started to do things like putting into place our voting intentions, right, with respect to how we think about voting at AGMs, with respect to boards, and how they conduct themselves. And when it came to the issue of sustainability, right, during my time, we're still very much in its infancy, but we're already starting to talk to the boards around the question of loss avoidance, right, being basically the first step really when thinking about the financial impact of biodiversity and of sustainability. And that was really around making sure that you avoided risks that could lead to basically either your products being boycotted, that could lead to basically being challenged in the market, right, in terms of your own marketplace. So we started with that, and then started to then advance the conversation around, okay, we can get around that first hurdle. How do we then think about, looking at this as basically being a positive value creator, right, for the businesses? And that one, to be honest, it was a challenge at the time. Probably is still a bit of a challenge right now, right? A lot of the board discussions even today revolve more around loss avoidance and around risk management, really then looking at it as a positive factor in terms of how do you actually create value. But I do think that that conversation is actually changing. And I think, for property companies like SD, right, you start to think about basically how does this add value to what I'm doing in terms of creating market value for my buyers, right, or for basically the desirability of my product. So I think those conversations are changing. It's an evolution over time, but that's how essentially we started that conversation when I was at EPF.
Yeah, just in terms of biodiversity and value, I think a couple of things to note. One is a big chunk of the global economy or global GDP relies on a healthy nature and healthy ecosystem. So about 50 trillion worth of GDP is reliant on the economy and nature doing its job. So if nature and biodiversity is impacted in some way, it will impact not only the livelihood of people, but also the returns of company. Which brings me to my second point, is that there is a direct link around the value that companies generate, and obviously as asset owners or investors, the returns that we get. So today, the way companies are impacted is that if they don't adhere to what's happening in nature, their cost of operations, their social license to operate, and in turn, their public acceptance of their goods, as Tan Sri Shahril says, could be impacted, and that will directly impact shareholder return. At the same time, you see many examples of companies getting fined for not doing the right thing. So 3M, Chevron, Tesla with their Brandenburg facility in Berlin, where they had wastewater issues. But I think where I would like to start talking about is that we see parallels with nature, with climate. So when climate first came up, and it came up mostly in the West at first, a lot of us in, I guess, this part of the world were kind of staying put, looking at what's the development, what development is happening. But we quickly recognized that climate for a lot of people is a compliance game, but for some, and those that really do it well, it can be a competitive advantage. So similarly, in terms of nature and biodiversity, there is still ways to go in terms of development of standards and targets and metrics. But we see similar pathway where first, we need to recognize that at some point regulation will come, so companies need to be prepared there. But companies that are willing to understand the space, maybe start low investments to get up to speed, could use it as competitive advantage, and thus have a first mover when nature becomes front and center to a lot of consumers.
Tan Sri, would you like to add to that?
Yeah, so I think I would like to encourage everyone to look at not just biodiversity in its single context. It must be looked at within the context of climate change, biodiversity, and also pollution as well. And indeed, this is something which we, Malaysia and other countries in the world, have committed when it comes to the SDG, the Sustainable Development Goals 2030. So some of you may be aware that from time to time, countries are supposed to report their progress. And in the context of Malaysia, we just about 3 weeks ago submitted our voluntary national reviews of our SDG 2030 commitments. And the good news is that we are performing better than the global average, meaning that if globally by 2030, only 17% of the goals are expected to be met, which is actually very, very low. We are looking at 47%. But that's still far from the 100% target that we all set for ourselves. So I think it is important in the context of biodiversity, in the total context. Now, generally people have got this assertion that when you address climate change, biodiversity, and pollution, you'll be at a loss. But actually, it can be the other way around. So if I may, taking the example of IOI Corporation, so IOI has been developing organic palm oil and taking into account environment and so on. So the intuition is that if you go for organic, your oil palm yield would actually drop. Right? But guess what? No. The oil palm yield for organic oil palm is actually much better. So not only are you able to get better pricing for organic products, 20 to 30% higher, but you're also actually getting more output. So again, that's a counterintuitive, and therefore I would assert that when you invest in nature, it will give you real returns, and plus you're doing good for the world anyway. Thank you.
One more question to three of you before I move on to Mark is this. I'm sure there have been situations where at the board meeting, you are told that if we are to do this, say for biodiversity or for the environment, this is the return we're going to get. But if we lessen our investment in the things that will protect the environment, we'll get a higher returns. So what do you do? What's the board deliberation like when you go to a situation like this? I'm sure there are situations like this. And better still, if you can share with us, and without naming it, an actual situation that you went through in this process.
Yeah, so today, the examples of that we find when we talk about climate, because climate now in terms of pricing and regulation is there. So in the past, when you talk about a development, you talk about a project, you're really focused on the commercial returns of that you generate, right? But now because the fact that, and I'll share a bit of PMB. So 2 years ago or 3 years ago, before we came out with our sustainability commitments, we really didn't factor in a hard way things like the emissions of the investments that we generate, right? But now, because of the commitment and the commitment that we firstly will be net zero by 2050 and the reduction of the intensity in carbon, we take that into account in terms of both new investments and future investments. So every investment that comes through our desk right now, we will need to understand what is the impact of the investment in terms of the average carbon intensity per million ringgit dollars. So today, when we started the baseline, our carbon intensity per million ringgit of AUM is something like 49 ringgit, right? And over time, you want to reduce that significantly. So we are very attuned to saying, if I make this investment, does it increase my average, or does it help my long-term goal? Now, we see that over the next few years, we need to ratchet it up. Meaning, not only does it make sense to look at from an average, but we also need to build in carbon pricing and maybe at some point carbon budgeting. So every investment decision, we will measure the carbon, we will then price in the carbon, and we will then adjust the return according to that cost of carbon. And then at some point closer to 2030, if we feel that the intensity is not getting there, we might even start budgeting the amount of carbon our investment teams can generate. And that's something that we're still studying, but we're moving to a world where we are ultimately say, look, this is only the amount of carbon we can afford to generate. The best investments will be allowed to generate that carbon because there's a cost to that carbon. I think in nature and biodiversity, something similar will need to evolve. And in the case of climate, the target, the metric, and the way we measure is kind of clear now, meaning people are aligned to the 1.5 degree goal. The measure that we're trying to measure is the CO2 equivalent, and there are standards around how we do that. On nature and biodiversity, there is not yet full alignment in terms of what is a 1.5 degree goal. I know there's the Kunming-Montreal Protocol that says that we want to reduce or halt the 30% of biodiversity loss or reverse it by 2030. But more needs to be done in terms of what is the single metric, because that's where the challenge comes in. In nature and biodiversity, there will not be a single metric to guide what companies need to do, because biodiversity and nature is multifaceted. You've got water, you've got air, you've got a lot of different things. The other thing that I'll note is that there will be a lot of challenges trying to measure this, because a loss of a tree in a rainforest will be very different than the loss of a tree in an urban context. So how do you really measure the metric? And this will be very location dependent. And because it's location dependent, the cost to monitor and understand this will be much higher than climate. So what I guess in a nutshell is that I think boards start having this conversation when they feel, one, regulation is coming and they really need to understand it, or two, there is going to be some form of competitive advantage by taking the lead on these things. So that's where the trade-off between short-term and long-term value comes in. So for us as investment managers, it's a bit easier to do it because we invest over the long term. So if we don't do it today and the asset becomes stranded, then we can factor in the cost. So in the past, climate was a bit of an esoteric topic where, yes, there is climate risk, but no one really factored in. But today, when we make an investment, we do factor in obsolescence risk of things like buildings, offices, and our investments, so that we are very, very clear. So similarly, boards will have to take that into account when we think about nature and biodiversity, but the standards have to come up.
Thank you. Tan Sri Shahril, all of us EPF contributors, every year we wait for EPF to announce their distribution, right? How much are you going to pay us? So how do you, when you are EPF CEO, how do you, when you come across your investee companies who tell you that, look, we're going to have to do this, but in the short term, this is the returns we're going to get. It's not what you want, what you expect. So your returns from us will be lower because of the need for us to do certain things. So how do you deal with that kind of situation?
Well, a good thing is that EPF is a very long-term investor, right? So its horizons basically typically go way beyond the short-termism, right? So what when I was running EPF, right, when we were faced with issues like this, for one thing, EPF has never depended, like any good fund manager, right, on any one company in terms of having an outsized impact on its returns, right? So you have a very broad, diversified portfolio. You are then able to basically shift your AUM and shift your investment goals based really on those long-term goals you have in mind. So when it came to looking at Malaysia, right? So when it came to basically having that conversation with industries or sectors which in particular was seen to be having an impact on the environment or on basically the sustainability issues, right? The discussions were always around what is your intention to actually shift that strategy over the long term. We know a lot of these things can't be done on the short term, right? I think as Dato Rick and Tan Sri Wahid was saying, right? You actually have to engage over a long period of time. And the one thing, even right now, and from my experience sitting on some of the boards, right? What I said earlier, when it comes to decision-making around sustainability issues, right? Not just biodiversity, but sustainability in a more general topic. Management sometimes undervalue the loss avoidance or the risk management factor, right? So it's very easy to say, this is going to cost me X dollars, it lowers my return by this much, right? It's much harder to pinpoint, but if I do this, then I avoid this risk, which potentially can cost me this much, right? So I think boards do need to ask that question, right? Which is basically, yes, you're showing me just basically what we can see on paper in terms of basically the cost of investment and the potential impact on returns, but you're not showing the full picture really around the loss avoidance that actually is a very important subject for boards to consider, right? Because boards are not just there about thinking about the short-term money making. The boards are there to protect the company and stakeholders against this kind of long-term strategic mistakes, right? So again, like I said, I think those are the conversations at the board level that are happening today. I think boards which I think are a bit more sensitive to this are asking the right questions, right, around the total impact of those decisions you're making on the financial side, not just immediate short-term P&L. It's also long-term strategy. It's also based on long-term positioning and risk management.
Thank you. That's right. You want to add to that?
Yeah, so when we talk about boards, typically people talk about the big boards like, your Maybank, Samdabi, and so on. But, these decisions are also happening and have got to be made at the small entities level. So if I were to wear my WWF hat, we'll be working with a number of plantation companies and nature-based companies. So in order of addressing their issues. Now, in some cases, the forest plantation companies, they will have forest plantation in between two forest reserves, for example. And that becomes a problem because some of these involve the highways, so to speak, for elephants in Borneo, for example, in Sabah. So in that respect, this one company, Sabah Softwood, so they used to incur easily RM500,000 a year from losses from devastation, crops being destroyed by the elephants, Bornean elephants. So what we agreed with them was to create the corridor for the passage for the elephants. And with that, they incur only about RM50,000 a year in terms of the cost of maintaining that, but they avoided RM450,000 in terms of further losses. Likewise, for Sawit Kinabalu, so similar situation as well. So the point I wanted to make here is that these are real savings that you can actually get by addressing nature, if I may. Another element is not just about the low returns from doing something good, but sometimes it's about survival. So there is that general statement that we all make, is that companies that ignore sustainability will not be sustainable in the future. And this is real. And we learned it from our COVID-19 days, right? When a number of Malaysian companies were slapped with a withhold release order. They were banned from exporting their products to the US as a start. Now, I remember there's one company that said that, look, we're not worried because today we are only exporting 1% of our product to the US. But guess what? The moment you get banned by the US, European customers also stop buying from you as well. So that becomes a problem. And of course, the issue was very much in respect of forced labor and also issues relating to accommodation for the workers. So if you're going to argue with me that by not spending a few RM100 million to improve the workers' housing, you're going to improve returns. But if you just don't spend that RM200 million, for example, to improve the accommodation standards for your workers, you're not going to be able to export your products at all. So, and that element of not embracing sustainability will result in you not being sustainable. I think it's real and it's proven.
Thank you. Thank you. Mark, question to you. Dr. Tan Lokman, I don't know whether he's still around. He said in his presentation before our session that 10 years ago, banks will chase them away when they ask for green financing. Today, they're all invited to have nice meals at the banks and provided lower interest loans. What has changed and what are banks doing actually right now as far as green financing is concerned?
You know, when I was born in 1972, there was Malaysia had about 63% forest. Today is 58. So 10 years, or I'm 53 years old, so 53 years ago until now, the world has kind of changed a bit. But it's come to the limelight that this is an agenda that is very important. But, you know, again, it goes down to the point, it's not just altruism. You know, banking, the finance world is all about, you know, shareholder value and creating shareholder wealth, right? But the reality is, we've come to a realization that, as you know, both Tan Sri and Dato Rick has mentioned as well, it's all about safeguarding the future. And if you don't safeguard the future, the longevity of the organization or the bank that you work with will not be there. And the world is changing quite rapidly. The whole financial sector is changing very, very rapidly. Then, of course, you layer that with commitments that we have. So banks have commitments in terms of net zero as well. We have committed and we have already achieved net zero in terms of our operations. So that's our scope 1 and scope 2. But the next level is the scope 3, the bank's scope 3, which is basically our customers and whether or not they are able to achieve the right kind of emissions levels, right? So that's more on emissions. In terms of nature and biodiversity, this is hugely relevant. If you think about the analogy that we spend a lot of our efforts upgrading businesses, you know, whether it's technology-led or whatever it is, businesses. And you think, if you pull the analogy like if you're a computer and businesses are apps, and you're always upgrading the apps, the latest version 4.0, 5.0, or whatever it is, the ecosystem, whether you're talking about on the climate side, on biodiversity, nature, everything around that ecosystem is like your operating system of your PC. If your operating system crashes, all bets are off. And we've come to realize that. The capital markets have come to realize that now. So we're not doing enough, and to be honest. And there are also reasons I can elaborate later. I'll save my bullet for later. That, you know, to share. I think we can do a lot more, right? We can price it. We should price it more to make it create more momentum, create a lot more awareness. Awareness is another big issue that we observe, which could do with a lot of improvement.
I know that in recent years, banks have been announcing that they have increasing their portion of green financing, loans for green financing, ESG and stuff like that. But has there been a rollback? Because if I'm not wrong, I read recently, maybe not your bank, but one of your competitors actually announced that they're going to roll back some of the promises that they made earlier, especially after the new president in the US seems to have changed a bit of some of these things. Have you noticed anything?
Yeah, I mean, basically, American banks are rolling back, right? And they have rolled back. European banks like ourselves, we are very steadfast in this whole commitment, and we remain so. Our group CEO, Bill Winters, is very much involved with the GFANGs, which is all about the financial markets, the participants' commitment to the climate agenda. But it has bifurcated, Kay Tat, it has bifurcated the whole financial sector. And right now we're also in a little bit of a limbo, not too dissimilar to tariffs, but and what is interesting though is that I was in the UK recently, and on a roadshow, and when the participants in the UK, and these are the industry participants, and when they realized that Malaysia was offering great opportunities in terms of climate, in terms of green nature and whatnot, there was a lot of interest to attend the roadshow that we were leading. And I actually asked one of the participants to say, hey, I was surprised because this event happened on the 2nd of May. And the 2nd of May in the UK, not a good date. It's 2nd of May 2025. Reason is, it's a Friday. Never do a roadshow on a Friday because no one works in London Monday or Friday. They all work on Tuesday, Wednesdays, and Thursdays. And Thursday nights is the new Friday night, right? The second reason is Monday was a bank holiday. So straddling a bank holiday on a Friday, I told one of my colleagues, no way will we be able to attract interest to come to this event that we were hosting in London. Lo and behold, we had a lot of interest from engineering companies, from companies that were very, very involved in this particular segment. When I asked why, it is because Malaysia is still very committed, and the US for them is unsure and is shut for business as of now. So the world is split in this area.
Thank you. Before we move on to the questions from the audience, one question on bank financing. The GLCs, the big boys, right? The Bursa listed companies, they are into doing a lot in this area. But what about the smaller Malaysian companies? Do you see the SMEs approaching your bank, asking for green financing? That they're doing things that they can try and apply for under green financing? Do you see that?
Short answer is not enough. Malaysia is 97% MSMEs, 40% of GDP, 40-50% of employment, but the agenda that they are prioritizing is still very different. For a lot of them, it's still very much existential, trying to be relevant, trying to make sure that their exports, things like tariffs and stuff would be more important, interest rates as well. So all those basic barometers. When it comes to, anything to do with sustainability, yes, they know it's important, especially for those who are linked to the multinationals because they have to follow suit the multinationals' agenda. But unfortunately, it is not moving as quickly as we would like to see them. Now, of course, also Bank Negara and so on, we've also got certain financing schemes that have been provided. But when you think about the number of companies in this area versus the amount of potential financing that could help them, subsidized financing to help them get across the line, there's still a big gap. It's a bit worrying for an emerging country like ours to have potentially a split economy where the GLCs are right up there, but the MSMEs are a few years or decades behind on this agenda.
We have a question here. How are GLCs and IFRs, how are GLC and FIs could make financing more accessible to SMEs, whether indirectly or directly? Mark has answered on the part of the banks. What about the likes of you guys? Do you all help? Would you help invest in smaller companies that want to go in that direction?
Yes, similar to what Shahril said, when we think about creating our portfolio, right? Ultimately, we're trying to create a robust portfolio that is resilient, that has got a combination of growth, diversification, and so on. So when it comes to, emerging things like energy transition, sustainability, or even, nature and biodiversity, for us, there's a specific risk reward for that. And there are different shareholders or different investors that's willing to take that risk reward. In the case of EPF, and I would say someone like PNB, we are probably looking for more investments that are yielding and have a longer term horizon. Not so much the J curve where there is development risk, but if the development risk that you take pays off, there's a commensurate risk. So when it comes to things like SME investment or new tech startup or some of the things that I just mentioned, we're probably less suited for that, and we typically invest into that space via funds that are more specialized to understand that space, who can understand the right investment stewardship to manage those investments. Having said that, where we play a role is we are at the heart of it risk managers. We're trying to manage the portfolio risk for the long term. And so what we do is we look at the companies that we invest in, and these are large companies, the Maybanks, the Sime Darbis, the Sime Darby Properties, and we ask ourselves, do they have business models and operating models that are resilient over the long run? So in the past, it was really about are they in the right sectors, exposure, and so on. Then came sustainability, where we asked, is their business model robust enough to cater for the requirements of sustainability? So now, with nature coming on and standards around TNFD, reporting around TNFD and so on, the similar questions will come around, are these companies robust to then tackle the challenge of nature? Now, the good thing is that boards, management teams, and companies are now attuned to deal with a topic like nature because they had to deal with the topic of climate and labor and so on. So they've got management committees, the boards understand the issue, management understand the issues, and more importantly is shareholders understand the issue and the value of doing this. So when something like nature and biodiversity comes along, I think it's a bit easier than when climate came. When climate came, all of us had to wrap our heads around. We didn't have a sustainability team looking at this. But now with something like with nature coming on, I think we're a bit more prepared for that.
Okay, a question here. On a scale of 1 to 10, 1 being terrible and 10 being fantastic, how would you rate the readiness of our PLCs to embrace urban biodiversity in how they are governed and in terms of their operations? They want a ranking, a rating from you. Anybody?
I'll start, and maybe Tan Sri Wahid as a former Bursa chair can weigh in. As I said, I think because companies have gone through the wave of preparing for climate, so they've got, the boards, the management, and the systems are somewhat there to deal with something like nature coming in. Are they dealing with nature today? Probably not in the way that we expect them to do. But the thing is, nature and biodiversity is complex because, as I said, what's the target that we're going? What are the metrics? What is measures of success? All that is still being developed. So as industry practitioners and as people in the space, we need to simplify all of that, simplify the language so that it is easier to communicate across what is it that we're going to do, what is a measure of success, and why do we need to do it. But today, it's not.
Is there a global standard, or you guys have to do your own metrics?
No.
Do your own metrics?
So today, the way we approach it is similar to how we look at labor standards and so on. There are base expectations and best practice. And we kind of ask our companies, firstly, do you have a nature biodiversity policy? And then we look at which companies are more exposed to this space, and those are usually flag sectors. And then we then say, okay, do you have, policies, strategies to tackle it? But there is no single standard, there is no single target today to kind of say, yes, you are on the right path. It's not like carbon where you can say, look, here's the amount of carbon I emit, and I can show progress by showing the reduction of intensity or reduction of absolute carbon that I generate. In nature and biodiversity, we don't yet have those metrics.
Thank you.
Kay Tat, if I may, it is actually a journey. 10 years ago, when we first spoke about climate change, most companies had got no clue. So it was very difficult for them to be able to understand. But we put in a lot of effort in terms of simplification. There's a lot of work being done at the regulatory level. So we had GC3, co-chaired by Banegara and SC, for example. And we have collaboration among the private sector, the CEO Action Network, climate governance, and so on. So these are all efforts collectively aimed at improving the comprehension of the marketplace. And that has helped tremendously. And I would say that one of the best features of what we did was in terms of quantification. So Rick was right. When it comes to climate change, it's easy to quantify. But even then, we came up with a standard measure. So because it's expressed, when we talk about greenhouse gas, right? So not just carbon dioxide, but there's methane, CHF, and so on, right? But we express it in terms of carbon dioxide equivalent. So we can then start to measure, and it comes with better comprehension. The challenge with nature is that there are many elements, and what we need to do is to actually find a way how we can quantify it easily. Because the moment people are able to quantify, then the comprehension level will increase, and it'll be easier for them to address that. So back to your question, if there is actually a figure, the rating, I would say probably for biodiversity in nature, or probably at the 5 level. Thank you.
Anybody?
No, I think, if you think about a sliding scale or score, right? From my own experience, there's a very high correlation between, where you sit on that sliding scale and the size of your company, right? So it's generally easier for the very large caps to focus on these issues because they have the resources to do so. They have boards with enough members who understand these issues, and they have shareholders who really focus on these issues as well. So you'll find that the larger companies really will probably do better than the small companies, just for practical reasons, right? And for resource reasons as well.
And not because Tan Sri Shahril or Tan Sri Wahid and Dato Rick is here, but actually reflecting from a banker's perspective, I think Malaysian GLCs should score quite high. And the reason I say that is because Malaysia, compared to many of the countries that are global, many of the countries globally, is probably more advanced in this space than the other countries. You'd be surprised. We are even more advanced in terms of taxonomy, in terms of TCFD as our little cousin down south, that little red dot. So we are quite progressed. And sometimes progression also comes with complexity. The GLCs, the GLICs are pretty advanced. And if you compare that with some of the markets in some of the countries, I hear Mongolia is also quite advanced, surprising, but but so I will put us up there in the 7 plus. In terms of the measurement, and it's an interesting one because today we have taxonomy, and we also have TCFD for climate. For nature, there is this new thing called TNFD, which is the Task Force for Nature-Related Financial Disclosure. Very complicated to determine because you look at the geolocation, you look at the sites and all that. Standard Chartered were one of the early adopters, but it is still finding its way through. So through JC3, as Tan Sri Wahid was saying, JC3, we published some publications as well around nature disclosure. And I think this is going to be the new chapter that might be introduced into Malaysia now that we've come through TCFD. Now the next stage will be TNFD.
Thank you. A couple of questions here. Well, I think it relates to greenwashing. A worry that companies are hyping their ESG initiative, not serious about it. They produce glossy report. How do you address that? Are you able to identify that these things are happening rather than they are genuine work that they're doing on the ESG front?
Yeah, as an institutional shareholder, and we came out strongly to say that we want to have a net zero portfolio by 2050. And in our disclosures or in our annual report, 99% of our emissions are finance emissions, meaning they come from our investment portfolio. And for us to really deliver on this ambition, we need our investment companies these are the likes of, utility company, plantation company and so on, to really decarbonize over time. So it is in our interest to understand when they make a commitment around net zero, and all the companies make a commitment around net zero, how credible is this commitment, and are they likely to succeed in their pathway to net zero? Because if they are not, and they're not credible, we need to engage them to make sure that they're credible. So for us, we actually have a way to score and understand the progress of this company. So it starts off with very basic things, meaning, do you have a commitment? Do you have a target? Do you have a pathway to that target, and so on? But over time, we then need to understand, do they have a strategy? Do they have initiatives? Do they put funding behind those initiatives, and so on? And related to that is we have updated our voting guidelines, and we will vote accordingly. So if a company we see doesn't make sufficient progress towards the net zero or sustainability commitments, we will vote no towards the re-election of the chairman or their sustainability board chair. So in a sense, the way we counter whatever they're hyping is to really understand the commitment they're making, and is there enough backing that commitment. If there's not, we will then start writing shareholder letters, understanding what they're doing to reduce their emissions. Because if they don't reduce their emissions, our emissions, as reported as Scope 3, will remain elevated, and we don't get to meet our what we've set forth as a target. So it's early days because we started to update our voting guidelines last year. We started to engage companies, but the proof is closer to over the next few years where there is progress made. So most companies, although they set a 2050 target, there is a 2030 milestone around have they reduced sufficiently, and most companies say they will try to reduce intensity by 30% by then. So we will start engaging, and we want to see meaningful progress. That's how we say we test whether there is greenwashing or not.
Thank you. Mark, how do banks, do you all try and detect whether it's greenwashing?
Yeah, I mean, we rely on, first and foremost, third-party validation, public validation if there are ESG scores. But over and above that, we have our own set of ratings, right? So we will look at what we call ESRM, so the Environmental Sustainable Risk Management, where it's a framework with certain criteria. And if you claim to be green, then it'll be our green framework or our transition finance framework, or even when it's sustainable linked. So we will have a series of criteria that we go through. But the reality is actually we find that I think it's more unintended greenwashing. You know, it's like kind of second degree greenwashing, if you will, right? I think this area is an area where people are, it's still very new and everyone's trying, but it is the unintended outcomes that sometimes then gets murky. So even when it comes to some of these disclosures that we do and the banks do, we're also a bit worried, we're a bit nervous because we'll issue something this year, and the next year, oh yeah, you know, it's completely off, right? And we don't want to also get caught for greenwashing. So there's a lot of nervousness around this, and we also got to be careful that we're not policing greenwashing to the extent that it's actually limiting progress.
Thank you.
If I may, Kay Tat, I would like to support that, because I think so much talk about greenwashing has made some companies nervous about reporting on what the progress that they're doing, right? So I think the truth is all companies, if they can help it, they want to do good, right? And it's just a matter of comprehension, knowledge, and so on. And it's a learning process. And I think we should give companies the encouragement to continue to improve themselves. And that element of assurance is important. We can start with internal assurance first before we get to the external assurance. And I think the fact that most companies are prepared to invest in the knowledge and assurance process, and that should be supported, and don't simply call out people for greenwashing for the good effort that they're doing.
I think that's one of the reasons why we together with Berhad and FTSE, we launched the ESG Awards a few years ago, and we gave gold, bronze, silver to encourage companies so that they can improve. This question must be from the organizing committee or the people behind this Urban Biodiversity Forum. So I have to post the question. Is your organization incorporating nature and urban biodiversity in your investment decision, specifically nature and urban diversity, rather than the broad ESG? Are you going to specifically incorporate this in your board decision or management decision to promote biodiversity?
Yeah, I'll start. So early this year, PNB, we published our policy document with regards to nature and biodiversity. So it's still, admittedly still early days, but we have a policy document where we laid out specific base expectation and best practice we expect our companies to adopt. And ultimately, the way we see this is it will follow the pathway that we did for climate. So climate, we came out with a policy, we updated our voting guidelines, and we started to engage companies, and we then wanted to see progress. So similarly, we came out with a policy document on nature and biodiversity. We've updated our voting guidelines accordingly, and the target set is by January 2026, we want companies that have material risk to nature, and there's a definition that we adopt to have a nature and biodiversity policy, and at least have a starting point around what's the approach, what's the strategy, what's the targets around nature and biodiversity. What was interesting was we looked at the companies that we invested in, and we then looked at, did they identify nature and biodiversity as a material risk factor? And we ourselves assess them whether we think it should be a material risk factor. And sometimes they were a mismatch. So that's where the conversation used to happen to say, look, you didn't identify biodiversity and nature as a material factor in your risk assessment, but we think it is, and you need to adopt accordingly. Because for us, the companies that have high materiality on this, we will start, in a way, eventually enforcing our policy on those companies. So we are taking a triage approach to it. So to a long answer to the question was, yes, we do have specific policy, and in our investment papers today, there is at least a commentary around any material risks or any material controversies with regards to this company in the nature and biodiversity space. But we haven't yet be very rigid around, okay, if there is, don't make the investment. For us, if it is, then we need to have a discussion around, do we need to, does that factor in, is it a no, is it a maybe, is it, oh, let's invest, but let's figure out what are the mitigation factors.
Thank you. There's a question here with regards to the oil palm industry. Maybe, Tan Sri, would you want to take this question? How can sustainable investment frameworks be structured to support SMEs and smallholders in their green transition, particularly in sectors like oil palm?
Yeah, so I would encourage the first step towards RSPO. So I think all oil palm plantation, whether big or small, should strive for RSPO certification. And I think all the elements of sustainability are actually inside there. So the moment you're certified RSPO, means that you are doing good already for nature. And that is actually where you are able to actually export to markets where you are able to actually obtain premium pricing for your products. So I would say the standards already there, just get it done. If you need assistance, I think there are many government agencies that will help you if you're a smallholder, for example. And likewise, I think the larger plantation companies too do offer that assistance, if I may. So that's in general. But I mentioned earlier on about the organic, palm oil, and I think that's a very attractive proposition for the smallholders to pursue as well. And again, this notion that if you don't apply chemical fertilizers, it will result in lower yield, below 20 tons per hectare, the answer is no. Based on our own experience at our ICOP, so we started with 1,100 hectares in Kluang, and we've seen improvement in yield. And so the hectarage is now being doubled, basically, to be able to produce more. So again, the encouragement to the smallholders would be go for RSPO, and thereafter go for organic. Thank you.
Thank you. There's a question here from David Hashim, and it's related to something that I've actually wanted to ask the panelists. David's question is this: given the opposition by the Trump administration to SDG, ESG, and climate change objectives, how should Malaysian companies respond?
My belief on that basically is that we need to think for the long term, right? And yes, I think there's a current political environment in the US which may be hostile to it. But if you believe basically in the need to invest in this for the long term, then you just see this as yet another blip, right, in the long journey towards essentially getting everybody aligned towards the right goals. And you have to remember as well that US, yes, is an important market, but the rest of the world is your market as well. So the rest of the world is moving in line with the SDGs, is moving in line basically with a focus on sustainability as well as all these issues. And I think, it would be short-sighted to adjust, right, what you're doing in the short term and really, miss out on that long-term picture of addressing the whole market. You also have to remember basically that, the US market, while there is a political imperative around these issues, right, but consumer behavior is still very much the driver of purchasing decisions, right? And for a lot of consumers, these are important issues that you have to address. So you take it, I think, with a bit of a pinch of salt. You still invest for the long term. And for Malaysian companies, I think you have to keep your eye on that future as well.
So The Economist magazine two weeks ago came out with a big cover story, green lashing, basically talking about how there's a pushback in some parts of the world against ESG and urban biodiversity and the likes. So you think that Malaysian companies will have to play the long game in this? Will we play the long game?
I think Malaysian companies are naturally sensitive to what their consumers want, what their end buyers want, right? And if their end buyers, despite whatever the political rhetoric is at a point in time, your end buyers still want you to focus on this, then you do so, right? Because otherwise you lose market share. So that's really, I think, the way to think about this, right? Which is basically that, yes, there is commentary around this issue, but if you're focused on the long term and you believe basically that your market direction in the long term, it's important for you to be focused on sustainability and on nature, then you do so. Because what you're addressing really is your long-term market share.
Thank you.
Kay Tat, if I may, my view is actually, look, leaders come and go, and what's important for all of us to do the right thing. And clearly when it comes to sustainability, it's about doing the right thing, because doing otherwise will mean that we will not have a future where we can actually pass down to our future generation. So I think there may be a bit of green lashing, as you say, but don't worry. If you continue to do the right thing, you'll be on the right path. And I think, God willing, things will be okay.
Yeah, maybe I'll just add. I think for us, when we push the agenda of sustainability or green, is really to ensure that companies that we have invested in have robust business models. There's no stranded investments moving forward. So with that intent, we will encourage companies to invest, even though regulation might, move downwards and so on, because we think over the long run, these investments that you make, or this push into green and sustainability, will make our companies and investments more resilient and more robust.
A bit of FOMO, since I don't get to speak, so can I just add a few points here? I totally agree with all these three gentlemen here. The point is, actually, banks are noticing. So regardless of green lashing, whatever, banks are noticing. And if the asset that we are financing, the property, is in an area where there are nature or biodiversity risk, your quantum will be affected, the tenor of the financing will be affected, the pricing will be affected, and not just from a lending perspective, but cost of equity as well. Cost of equity will go up, at the more risky it is. So I think we could also think about the other factors, regardless of what goes on politically with the Orange Man.
Thank you. Gentlemen, concluding remarks, especially to those who have not started on this journey, companies, businesses who have not started on this journey, maybe some advice to them or some encouragement to them. Rick?
Yeah, so first point is that this will come. So before you wait for regulation to be imposed on you, take the opportunity to create advantage out of it. So go on the offense and not being on the defense. So see it as a long-term investment. And if you make the investment now, you will set up your company better in the long run.
Tan Sri?
Well, I made the statement earlier that companies that ignore sustainability will not be sustainable. It is real. And it doesn't take a lot for you to do that. So we don't know what we don't know. We learn as we go along. But there's enough tools for you to learn from. There's enough support. So do embark on that journey. And I think, inshallah, if you do good, the returns will come. And if I may speak on the business that I'm in, this is wearing the other hat at Cypark Resources. So Cypark Resources is actually in the renewables energy business. We do waste to energy, solar, as well as biomass. So when it comes to waste to energy, what the mayor said was music to my ears in terms of, yes, reducing waste, but the waste that you can't reduce, please don't send to the landfill. Try to actually convert it into energy first before you actually put it in the landfill. So I think the point here is actually there's money to be made in doing good. Thank you.
Mr. Shahril, can I rephrase that question? What do you, as the former CEO of EPF, what do you say to contributors who worry that if there's too much emphasis on ESG, biodiversity, they will not get the returns that they would like to have?
Very simple, don't worry about it. Because again, like I said, right, if you look at the EPF and how it's constructed, right, it's really focused on your long term. And you have to remember, basically, your savings journey as a contributor to EPF, right, starts from when you're just starting out all the way until you finally retire at the age of 60 or maybe later, right? And the whole point basically is to make sure that your portfolio is resilient and sustainable, right? As our, my fellow two panel members have said. So you actually want EPF to do focus on these issues because you want a portfolio that will last you throughout your whole career and probably even beyond that. I mean, don't forget, I changed the rules, right? So you can actually keep your money EPF until you're 100, right, if you wanted to. So the whole point basically is to think of it as a long-term sustainable goal, right? And about building resilience for your own future as well.
Thank you. Mark, any concluding remarks?
Yeah, look, I think let's not take these as free externalities. We need to price it. And if you are starting, create awareness. Technology, AI, at some point, us human beings will price it. And once we can price it, it will become economical. But create awareness for now and just be all over it in terms of getting to grips with the topic. Thank you.
Thank you. I think thank you to members of the panel and a big hand to all of them.